Good afternoon and good evening. So you had a very interesting session earlier of navigating scale and driving innovation. So to compare to that, I'll make it crisp and let it be a little interactive in case there are any questions. So SFBs are formed as small banks to start with, and by the time you could apply, they got converted into small finance banks. So they were not really born for a small size, as the name sometimes suggests, but to cater to customers whose requirements are small comparatively. So it's not small banks, it's small finance banks. So when we started with the humongous constraints, but as it would happen for any startup, we all technically started as a startup. So when we were all trying to do, we didn't even know how much it would cost to build technology for a bank. So each one found out on our own way. So when I reached out to somebody who was building a universal bank, they said it'll cost anywhere between, it depends. I said, it doesn't matter, but how much it would be? They said anywhere between 200 to 500 crores. So when your own net worth is 130 crores and somebody says that you'll have to invest 200 crores, you technically fall off the chair and you have no clue in terms of what you would like to do. But at the same time, the expectations were from the regulator, from ecosystem, a bank is a bank. Doesn't really matter whether you're a small finance bank or a large bank, you need to be on top on technology because it's no more an advantage to be delivering certain products. It is a hygiene. You can't be a bank if you say that you are not offering IB, MB, and those are the requirements. So born out of necessity is that for us it was not navigating scale and driving innovation. We had to drive innovation because it's the only way we'll ever come to be a bank. And that's how the journey of Small Finance Bank started. I'll take you through in terms of us as a whole. It's not about Suryoday as an institution alone. So today, together, probably many of us may not even know that we entirely as a house, when group, the SFBs cater to around approximately 2 crore households, which is 7% of the Indian population. While in terms of balance sheet size, we are less than 1.5% of the overall banking balance sheet. So 5 times over in terms of the size is what you do. We are very large in terms of the number of customers we serve. We are very small in terms of the balance sheet at this point of time. I will use the word at this point of time. We have around 7,000 branches. We have 1.5 lakh people, and we have around 2 crore households, and we cater to approximately 7% of the Indian households. That's the landscape of SFBs. Before we started, most of us were microfinance institutions. So for us, customers were a part of a group. A group was a number, and hence we treated everything as a number. So people, when you ask what is an expected, what will be the customer delight? Yeah, if you're given 1 week, it is okay. Even if you're given 2 weeks, it is okay. So there was nothing which was defined as a customer expectation. So we all kind of set out what it has to be. 2 weeks are okay, but still can be done in 2 minutes time. So that's how it was formed. In terms of group loans becoming individuals becoming a group in some sense, but it is at a household level. And then we are generic products, we kind of tailor-made the products. The innovation was not thought of as innovation. It was a necessity for a small finance bank to compete with the larger institutions so that we have our mind space and we become larger. So born out of that is that as simple as that, it may be very difficult for a regular banker or a technological person in a bank to think. Why I asked a question when they wanted to put up connectivity, why do I need a lease line? It was very innocuous because I didn't understand technology. I said, if a mobile banking can operate without lease line, why do I need a lease line inside a bank branch? And yes, we said that no, it's possible. So then we kind of innovate, and we call it innovation, but the fact is that it is born out of a necessity. Why spend 15,000 rupees a month when I don't need to? So then you kind of gravitate on that. Facial biometric. It is not thought of as an innovation because I now realize that in SFB you can open an account in 3 minutes time, and it is not thought of as an innovation or a speed because that's the only way we know it. So that's how the innovation bit by bit was really formed. And today I think all of us, while we can say that I did this, as one of the speakers said, we did this as a number one, we were the first. In banking, it doesn't really matter whether you're a first or a second, as long as we can really give it to the customer. Nobody kind of deals with you because you're the first one to offer you something else. Are you the best one to offer, and are you really satisfying the requirement? That's how I think the migration of SFBs from customers to mobile banking made simple. We don't probably advertise saying that it is so much, but the fact is that most of the customers are today digitally included. We have gone one step more and said, can the entire household be digital? Can the lady of the household be digital? And what we saw pre-COVID and post-COVID is dramatically different. The environment has aided us in terms of doing the scale. So all of these products listed out today, you look at any fintech, fastest, they do it quicker, and they will say it's only unsecured loan. Today, I think it's coming to a situation where even secured loan, which is of small value, can be done completely through a digitized process. It really requires a little bit of a tweaking and ask the question, why not? rather than saying that, no, this is how it should be done. This does not really require us to override regulations. You can be super compliant with the regulation. The only thing you'll have to do is that you can't exactly think the same way and try to do the same thing and say, regulation is becoming strangling for me. It isn't. It is not, provided you kind of ask the question, why does regulation need me to do a particular thing? If I can do it in letter, if I can do it in spirit, it is not a showstopper at all. It's not an impediment. Building products, cute products. So for instance, for our customers, if I give a recurring deposit which is monthly, they said, no, we don't really kind of know, why are you borrowing? We can't really save monthly. You break it down and say, if you want to save 5 lakhs and over a period of 5 years, all you need to do is save around 60 rupees a day. So to tell 60 rupees a day for a person who is using QR code is completely understandable, and 5 lakhs is understandable. But if I tell them that you'll have to save 5,000 rupees a month, it simply isn't possible. That is what small finance banks in their own right, each one of us have done. AU would have done it with secured loan customers, we and Ujivan, and would have done it in microfinance customers. But each one has done, and I think as a group of 12 SFBs, while we technically are supposed to compete, we actually collaborate. So anything good that we do kind of gets spread into other. As a group, I think we have been able to benefit by collaborating, because the markets we operate is very, very large. Each one can do what they want in terms of growth of 25-30%, and yet collaborate. I think one of that we have done very well. Majority of us together is collaborate with each other. So from a security point of view, while one of the advantages we had as SFB is that we didn't have the weight baggage of legacy. So anything you want to do, we kind of said, why not? We didn't say that no, X, Y, Z would the constraints, and hence we will not be able to do it. This is how we plugged in all microservices. We don't necessarily get stuck with legacy systems. Plug and play whatever that is really required, which means that if I tie up with Anupam for rolling out my fixed deposit online, it takes about no more than 1.5 months. So a legacy bank would take probably 6 months, not because they intend to be slow, but the fact is that everything is put up as a process some 3 years back, and many times there is a miss in terms of revisiting the process for the newer ways of doing things. So this, I think, is what most of the SFB is done to be fairly successful in terms of making it small, making it plug and play. That's it from my end. Anything from you? Happy to kind of discuss. I can.
The last slide you had, APIs, right? All products separately. Now that from business side, completely understandable. How the tech is enabling that? And are you having equally kind of, investments on tech made like that?
See, I don't understand technology, but all I know is that if I can tell my team that this is what I want, they will tell me whether it is possible or not. Okay. So when a couple of years back we said we'll have to have middleware. I said, for what? When tomorrow when we have to migrate from this to other, it makes it a lot more easier, we can do it. So we did invest in a middleware a couple of years back, which made our transitioning from one CBS to another CBS seamless, I would say substantially, in 7 months' time flat. We moved from FIS to Finacle, and everybody said, I think these guys are cranky, it's impossible to do it. And Fifth Digital was the one who ran the project, but we did little more meticulously. But in 7 months' time, we were moved from one to the other, completely where it was all operating basis to continue owning it on-prem. We did it. I think the API connect and all of that has nuanced. And I think more important than what I heard from the previous discussion is that I think SFBs being young, don't start with the question in terms of why it is not possible. We start with probably saying that what it is needed to make it possible. So when Anupam wanted to upswing, we wanted to kind of tie up with banks to offer fixed deposit in a platform. So we asked him how many months. He said maybe 2-3 months. I said, can it be 1 month? Then the answer becomes 1.5 months max, and you roll it out. So maybe Sudhir is here, he can answer all the technology thing. But the fact is that I think we all find ways in terms of doing it very robustly.
Thank you, sir. I got the answer.
Yes, please.
I have two related questions on the deposits. Recently, it was said the RBI has given some informal guidance about the credit deposit ratio. How have we changed our deposit strategy in line of that? And second is, in the past, your strategy was to acquire more deposits digitally. So will the new, this RBI informal guidance will change any of that, or will continue to follow your old deposit strategy?
Sir, I think all of us have gone digital, so to say, in terms of assets. But I think the largest opportunity which is going to come, in my view, maybe it's a couple of quarters away, a couple of months away, just like we transact for mutual funds, I think we'll start buying fixed deposit online, and then you look at which is the best product. When I go into a mutual fund platform, I don't really look at whether it is the largest fund house. I look at the fund's performance. If it is great for last 3 months, 6 months, 1 year, and then I take a piece of that. If I have 1 lakh in the portfolio, 10,000 goes to that fund, and SIP of 1,000 rupees, 2,000 rupees starts. I think liabilities is also going to move that way, with CKYC becoming robust. And of course, there is a misuse which happens. I think it's that I think as it gets plugged, it's going to become digital. And when we had a tie-up with one of the payments bank, we got 83,000 deposits of 17,000 rupees each, 100 crores. We didn't even know that we mobilized so much. It was lying in the current account of the bank. So if that happened 5 years back. So if that, I think, is a potential, which I think all of us are going to tap, when that happens, the cost of mobilization or deposit is dramatically going to come down from what we have today, anywhere between 0.5% to around 2.5%, depending on what it is. And that will get translated either in terms of little higher deposit cost or in terms of reduced operating expense. So it will happen. But currently, I think we are in a regulatory regime where everything, at least on the liability side, has been twisted and used as mules and so on. We're coming across it. That, I think, cracking will happen over the next couple of quarters and a year or two. But liability is also going to be as digital as it is for unsecured assets at this point of time. That is where we're working on. Thank you. Anything else, we'll chat offline. Thank you.